$250 billion for xAI. SpaceX is officially throwing banker logic out the window. Best mega deal of the quarter?
Best? Try most desperate. Deal volume actually dropped 17% in Q1. This isn't a healthy market, Nate. It's just billionaires panic buying AI.
Oh, come on. A $1.2 trillion quarter is a gold rush. Sullivan and Cromwell just advised on $500 billion alone.
The lawyers always win. But let's look at the actual math on these deals, starting with Unilever's very expensive new spice rack. The rundown. No. Volume is down 17% across the board, but overall deal value just crossed $1.2 trillion for the first quarter. 12 mega deals over $10 billion.
And one mega deal. We will get to Elon in a minute. But first, the AI halo effect is officially trickling down to the plumbing. Ecolab is buying CoolIT Systems for $4.75 billion.
Wait, Ecolab? The guys who make industrial cleaning chemicals for hotel sheets?
The very same, but CoolIT does direct liquid cooling for data centers. Analysts are saying a third of the top 100 deals right now are just companies trying to ride the AI wave.
I pulled the CoolIT financials last night. It is actually a brilliant margin play. These new AI chips run so hot that traditional air conditioning just fails. You literally need liquid cooling. $4.7 billion is a massive premium, but Ecolab has the enterprise distribution to scale it globally.
Spoken like a true infra nerd. Speaking of massive premiums, Unilever is combining its food arm with McCormick. $44.8 billion.
I absolutely hate this deal.
You hate spices?
I hate when legacy consumer brands try to engineer growth by mashing two slow-growing assets together. They are selling it as a strategic combination, but look at the footnotes. Unilever is just offloading margin pressure.
Oh, come on. McCormick completely dominates the grocery aisle. You put Unilever's global supply chain behind Old Bay seasoning and you own the entire shelf. It is a classic scale play. Geopolitics are a mess right now. The macro environment is volatile, so deal makers are just buying size to insulate themselves.
Size does not fix broken unit economics, Nate. I guarantee we see antitrust regulators circling this by tomorrow morning.
We will be watching the wire for it. Real quick on the gossip front, KKR is quietly taking Taiyo private. It is a total private equity land grab in Japan right now. And Kik just bought FaZe Media to try and corner the creator economy.
FaZe is still alive?
Barely, but Kik has money to burn and they want the drama.
Speaking of burning money, Sullivan and Cromwell just locked down the top spot for legal advisory. Over $540 billion in advised deals this quarter.
Almost half of which came from one single invoice, SpaceX buying xAI for $250 billion. How does a banker even model that valuation?
You do not. You just close your eyes, add a few zeros, and pray the market buys the narrative. Let us look at how they actually structured it. The big one.
$250 billion. I just need to say it out loud so my brain can actually process the number.
Say it a few more times. It still won't make mathematical sense.
It's the ultimate flex. First quarter M&A crosses $1.2 trillion globally. And 20% of that is literally just Elon Musk moving money from his left pocket to his right pocket.
Right. SpaceX buying xAI, the absolute crown jewel of the 12 mega deals we saw this quarter. But Nate, look at the underlying data here. Deal volume actually dropped 17%. This isn't a healthy booming market. It's a handful of whales skewing the entire chart.
I completely disagree. It's a highly rational market. Deal makers finally accepted that geopolitical chaos is just the new normal. If you wait for a calm quarter, you're never going to deploy capital. So you swing for the fences. Scale is the only defense right now.
Scale is one thing. $250 billion for an AI startup that shares a CEO with the acquirer is something else entirely. Where's the fairness opinion on this?
Oh, come on. You know the strategic logic. SpaceX needs a massive compute for Starshield and Mars logistics. xAI needs physical infrastructure and endless capital. It's a perfect marriage.
It's a perfect governance nightmare. I spent an hour looking for the footnotes on how they actually valued this. They keep talking about AI capabilities fueling a massive resurgence in deal value. Sure, Analysts are saying the race for AI drove a third of the top 100 global deals. But 250 billion? What revenue multiple are we even using here? Infinity?
We're way past revenue multiples, Maya. We're in the realm of planetary infrastructure. You sound like a tired credit committee from 2019.
I'll take that as a massive compliment. I just want to see the actual term sheet. Who actually wins here?
I'll tell you exactly who wins: Sullivan and Cromwell.
Oh my god, yes.
They advised on over $540 billion in deals this quarter. They're sitting at the absolute top of the global league tables. Can you imagine the billable hours on a $250 billion related party transaction?
The partners are probably buying private islands as we speak. But seriously, financing conditions did improve, which is the only reason you can even underwrite these behemoths.
Exactly. The debt markets are wide open if you have the right story. And AI is the best story on Wall Street. Even if overall deal volume is down, conviction is sky high.
Conviction or massive FOMO. Because if you look past the tech mega deals, the old guard is also doing massive weird things.
Are you talking about mayo and mustard?
I am absolutely talking about mayo and mustard.
$44.8 billion for a spice rack. We really need to look at what Unilever is doing. Voices. So the consensus from the analyst desks this morning is that artificial intelligence is the single engine pulling the entire M&A train right now. They're saying AI drove roughly a third of the top 100 global deals.
I read that note and I am calling nonsense on the narrative. Yes, first quarter deal value crossed 1.2 trillion. Yes, we had 12 mega deals over 10 billion, but overall deal volume actually dropped 17%. The train is not speeding up, it just has a few incredibly heavy boxcars.
Heavy is an understatement. SpaceX buying xAI for $250 billion is a whole different gauge of track. But you have to look at what industry observers are actually saying about risk. They are calling geopolitical volatility the quote-unquote new normal. If the world is unpredictable, you do not buy small bolt-ons. You buy massive scale to insulate yourself.
Insulate? Nate, you sound exactly like a managing director trying to justify a ridiculous premium. You do not insulate yourself from geopolitical risk by dumping $250 billion into a single AI target. You are just concentrating your risk.
I will own the banker speak on that one. But scale is safety. And it is not just AI soaking up the capital. Look at the private equity land grab happening in Japan right now. KKR is quietly taking Taiyo private at a massive premium.
Now that is an actually interesting structural play, way better than watching streaming platform Kick by FaZe Media.
Oh man, the creator economy ecosystem is just pure chaos. High stakes, incredibly volatile.
I give that integration 6 months before a public Twitter meltdown. But speaking of massive scale and potential regulatory meltdowns, we need to talk about food. Tomorrow, the regulators get their first real look at Unilever combining its food arm with McCormick.
$44.8 billion of spices and mayonnaise. I'm fascinated to see how antitrust regulators slice that one up. Spill the tea. So, while the entire universe is screaming about SpaceX and xAI, Kick buying FaZe Media is the actual drama I am here for.
Oh, come on. FaZe is a walking cautionary tale. Did we learn absolutely nothing from their spectacular SPAC disaster?
But that's exactly why Kick wants them. It's a pure distress play. Kick needs to dominate the live-first ecosystem, and FaZe still has massive cultural cachet with the gaming crowd. It's high stakes, volatile, and honestly, it's peak creator economy theater.
Cultural cachet doesn't pay down debt, Nate. Kick is basically buying a highly radioactive brand. I looked at FaZe's footnotes before they went private again, and their cash burn was genuinely legendary.
You just hate fun deals.
I hate bad math. If you want to talk about a smart, quiet play, look at what KKR is doing in Japan right now.
The Taiyo buyout.
Yes, a massive high premium take private bet. While everyone is distracted by the big AI shiny objects, KKR is quietly leading a private equity land grab in Tokyo.
It's wild how the entire market has just decided geopolitical volatility is the quote unquote new normal. It's like bankers woke up, looked at global chaos, and said, whatever, let's just do a $44.8 billion mayonnaise and spice merger.
You mean Unilever and McCormick?
Exactly. Give an advisor a big enough fee, and they'll underwrite a deal on an active volcano. Sullivan and Cromwell just locked in over $540 billion in advised deals for the first quarter.
Well, they certainly earned it, but we'll see if the regulators are as relaxed as the bankers. I'm already tracking early antitrust whispers on that Unilever-McCormick combination.
We are definitely going to be watching that tomorrow, along with Amphenol's open offer for over 1 million shares of ADC India officially kicking off. Tomorrow's radar.
I'm setting an alert for the Amphenol open offer tomorrow morning. The tendering period for those 1.19 million ADC India shares officially kicks off.
You're seriously tracking a tiny telecom tender? Maya, Unilever, and McCormick are trying to smash together a $44.8 billion food empire. That's the real radar item.
Unilever is just a glossy press release right now. I want to see actual cash moving. Plus, do you honestly think regulators will let them monopolize the global spice rack?
Oh, come on, it's mayonnaise and paprika, not weapons-grade uranium. Regulators have bigger AI fish to fry.
Check their combined market share in the condiment aisle. Brussels will have a field day with this.
Fine, I'll pull the antitrust filings tonight. But I guarantee KKR's quiet buyout spree in Japan steals the morning headlines.
Bring your notes tomorrow and we'll see who's right.